Well, Janet, second quarter had no shortage of news for investors to really contend with. So what was your biggest takeaway from the quarter?
I think it was really the ability of the market to take all those consistent drumbeat of headlines really in stride. I mean, volatility certainly spiked, particularly on the April tariff announcement. Then we had a quick reversion where the equity markets rebounded and credit spreads fully retraced everything by the end of May. And then the markets largely brushed aside the rising geopolitical tensions in the Middle East. For the quarter, equities rallied, credit spreads tightened, and where we sit at the end of the first half of 2025 is total positive returns across risk markets. That really underscores investors' ability to face down uncertainty.
Got it. So markets really showing some resilience in the second quarter. What should investors keep in mind as we enter Q3?
So the good news is fixed income markets are offering a cyclically high level of yield, but at the same point in time, the credit risk compensation is generally low. So I think it's important for investors to be mindful to not overpay for taking on credit risk or not taking an indiscriminate approach to bond investing. Rather, the name of the game is to capture the ample yield that's available by using an approach that emphasizes flexibility and diversification.
So where are you finding pockets of value today, and how are you positioning portfolios beyond that to really set them up for success in Q3 and beyond?
So a favored portion of the market for us is the securitized space. There's a number of subsectors there, and one of our favored areas is agency mortgage-backed securities. There we like the technicals as well as the yield advantage compared to some of the other fixed income sectors. Another exposure we're emphasizing is a modest overweight to duration. We think that presents a good downside hedge. And then lastly, we're positioning for flexibility. So we do implement a rolling 6-month outlook. That helps us identify mispriced securities, and it puts us in a position to be ready for some of the unexpected things that could occur in the third quarter.